hello, good evening, my officers. Welcome to the series called as Complete Economy Current Affairs for UPSC Prelims 2021. So this is Nisha Nujumudeen, your educator at Unacademy, an expert in Indian economy, current affairs and MCQs. So today if you see guys, we have another set of most interesting economic current affairs hit list topics which you shouldn't miss before appearing for the UPSC Prelims 2021. So a quick look into this particular topics guys, wherein a 360-degree coverage of the same will be discussed in today's class. So before that guys, those who are having doubt regarding the previous sessions of this particular series, below the comment box of this particular video, once the session is done, you will find the link of the playlist. Okay? Right from part 1 to part 20 of today's class in a sequential order, you will be able to find it. Is it very clear all of you? Yes? I can't see your messages. Where are you all? Yes? Am I audible and visible to you people? Hi Soham. Yes, Rishabh, Kriti. Yes, good evening all of you. Perfect. So here we go. So to know more about the details of my plus classes and free classes in the Unacademy Plus platform and free platform, below the description box of this particular video, you'll be able to find a link. There you can click on that and get the details of my classes. So if you see free special live series guys, every day 6 p.m. to 7 p.m. from Monday onwards, you'll have the 1000 Wala MCQ series starting once again in the free platform of Unacademy. And currently a batch course on ancient history is going on. And also weekend, you will be having the weekend current affairs batch course, 3 p.m. to 5 p.m. Do not forget to join for that. Clear? At the same time, guys, even from Monday onwards, you will be having the Prelim Sampurna 1200 MCQs for the UPSC Prelims 2021, exclusively from the 1 year current affairs, guys. You will have MCQs with a proper 360-degree coverage as well. That is a series that will be continuing once again in the Unacademy Plus platform from Monday onwards. Clear? Also guys, there is another YouTube channel of Unacademy called as Namma Is Academy, exclusively for the South Indian aspirants, but even for the North students. You can watch that because my sessions will be absolutely in English language. So you can even without fail watch that as well. Clear? Perfect. So there are so many surprises for you people. Towards the end of the class, I'll tell you in YouTube itself. So hold on with a lot of patience to know what is it. Yes, Harvinder, good evening. So yes, here we go, my young officers. A small announcement to you people, be it plus class or be it free class. Do not forget to use the code Nisha IAS Live. So that will take you to the plus class and to the free class without much difficulties, because plus class you will get a lot of discounts using the code Nisha is Live, and free class it will give you access to download the PDF, watch the classes for free, etc. Clear? Yes, so ma'am, I asked you a doubt, sending you a link. Clear if it is possible. Is it in the chat box you send it, Soham? Maybe towards the end of the class we'll discuss about it. Do not worry, okay? So yes. Here we go, my young officers. A quick look into the most important hit list topics of today's economy current affairs series is as follows. So you have topic number 86, which talks about the zero coupon bond. Then topic number 87, where you have the SDR, special drawing rights, which is indeed a very, very hit list topic because it is in the context of IMF, that is International Monetary Fund. Followed by agriculture cost of production. You'll have a current affairs from that particular area. And then again, the hit list topic of this particular year's prelims examination from the monetary policy, that is quantitative easing. Why is that important? And what are the important points to be noted in that particular regard? And also the 90th topic of today's class deals with a secure future for platform. What is a secure future for platform? That is the next question it will come in your mind. You will be learning that as and when the class is proceeding. Clear? So these are the important hit list topics which we'll be covering in today's economy current affairs class. So to begin with, my young officers, in a very short, crisp and to the point manner, let me quickly tell you what are these topics. So the first topic of today's class, it deals with zero coupon bond. So the subject area is public finance, and if you see why we studied this particular topic is recently the central government, okay, they used the financial innovation. Why? Because they want to recapitalize or inject money into the Punjab and Sindh Bank. For that, what did they do? They were issuing the lender rupees 5,500 crore. And that too, it is not just they are issuing the lender, but then it was worth of non-interest bearing bonds which are valued at the par. So 5,500 crore was issued, was being given to the lender, which is worth non-interest. That is the next important point to be noted. So now, before going much into this particular details, guys, I mean the current affairs of this particular topic, zero coupon bond, you should know what is the real meaning of a zero coupon bond and what is a coupon as a whole. Without understanding the conceptual part of this particular topic, you will not be able to understand the current affairs. Don't you think so? Yes, Devadarshini, good evening. So let's quickly have a look into what is zero coupon bond all about. Take care. Here we go. Now this is a kind of bond, or let's say it's a kind of instrument that does not pay any sort of interest to the bondholder. Normally when a bondholder is giving the money or whatever, it do pay some sort of interest, right? But then as far as zero coupon bond is concerned, it is exclusively a non-interest paying wala bond. Because they do not end up paying any interest. That is why, guys, a zero coupon bond is also called as what? A discounted bond. Yes, Nitish, hello. So then this particular zero coupon bond, for the reason that they are a non-interest bearing bond, it has been issued at a discounted rate. And the most important point to be noted here in the zero coupon bond is they are not at all issued at the par value or the matured value, rather discounted rate. That is the reason a zero coupon bond is also called as what? The discounted bond. So now you'll be thinking, what is the kind of return the investor will get? Here we go. The return an investor will get from such kind of zero coupon bond, which is a non-interest bearing bond, is the principal amount plus the interest amount. However, whatever is the case, guys, these are generally tradable at the deep discount rate. So this is the meaning of the concept called as zero coupon bond in simple terms. So having understood the meaning of zero coupon bond, let's quickly have a look into the current affairs perspective. Again, to the point discussion. So as I told you, since the government issued a financial innovation to recapitalize the Punjab and Sindh Bank, what did they do? They made sure that the zero coupon bond has been put forward. Now, the special bond for the Punjab and Sindh Bank, I can tell you, it came with a maturity of how many years? It's a huge period, I can tell, literally 10 to 15 years. So now, at the time of maturity, that means when they are kind of getting matured at the 10 to 15 years time period, then the investor is paid the so-called face value, or let's say the par value. Another important thing with regard to the zero coupon bond is, see, the zero coupon bond, guys, you cannot trade them, nor you cannot transfer them. It is not tradable and it is not transferable. That is an important point to be noted in the context of the zero coupon bond. Clear? Because the Punjab and Sindh Bank, they were in trouble only, the so-called recapitalizing of such kind of bank was undertaken by the central government. And that is a part, or let's say that comes under the so-called concept financial innovation to boost up the money supply. Did you understand now the current affairs of this topic? And now, since this particular zero coupon bond, though they are not tradable and not transferable, they are held at HTM. What is HTM? Held to maturity. It's a category of bank, guys, as per the RBI guideline. So under the HTM category only such kind of zero coupon bonds come in. And through though the zero coupon bond, though these bonds are different from your so-called traditional zero coupon bond, one point to be noted is that they are being issued at par and there is no interest. That is the only single point you have to keep in mind when you understand the concept zero coupon bonds. Clear? So very simple, guys. Whenever zero coupon bond is coming, it is equal to non-interest bearing bond. That's it. And also remember the Punjab and Sindh Bank are current affairs. They were being kind of recapitalized around 5,500 crore rupees. Just for recapitalize, the government was doing that. So we understood what is zero coupon bond. Now, Again, people will have confusion. What is a zero bond is okay, no interest. What is coupon all about? It's all about an interest, guys, which means in the zero coupon bond, in coupon is nothing but an interest the bond issuer pays the bond holder. For example, if I am the bond issuer and let's say Nitish or Soham or Deva or anybody in the class is a bond holder, means what is the interest? Okay, the bond issuer myself will be paying to the bond holder. That is called as coupon. And how does this coupon happen? They happen periodically. From the time of issuance of bond till the maturity, which could be 10 to 15 years also, because zero coupon bonds are issued for a long term, like 10 to 15 years. Only then they get matured. You got the point? This is what you should study with regard to this particular topic. Nothing more is required. With regard to zero coupon bond in short, sweet and simple term. Hardly we took 3 slides. The concept and the current affairs. That's enough. Pertaining to this particular keywords only, you will get questions for your prelims examination. Did you understand, all of you? Yes, Abhishek. Good evening, ma'am. When will ancient class resume? It will resume from tomorrow, Abhishek. Nothing to worry. Okay. So shall we go to the next topic, all of you? So here we go. The 87th topic of today's class, special drawing rights. Indeed, a very, very important topic, highly associated with the, International Monetary Fund. So now I think one day somebody has asked me this concept as well. I think the 2 days back, this concept has been cleared by me to a person who has a doubt. So once again, we're going to have this topic in the context of current affairs. So if you see, this particular topic is taken from the area external sector. And why we studied this is because recently a country, India, we said that we will not support a general allocation of new SDR or special drawing right which is done by the International Monetary Fund, because we felt that it might not be effective in easing or relaxing the so-called coronavirus driven financial pressure. The entire economy, not only India, but the entire globe has been affected because of this pandemic. We all know that. So taking into consideration our country, India's situation, we felt that when we go for a general allocation of a new SDR, which is done by the IMF officially, it is not going to give us any solution in relaxing or easing the so-called financial pressure that our country is put up because of this COVID-19 pandemic. That was one reason why we were not supporting it. This is the current affairs based on which you're going to study. So before that, you should know what is an SDR and also a little of point with regard to IMF, because those are quite important. Yes? Yes, Kriti. So here we go. What is a SDR? In very short and simple term, I can tell you that it is an international reserve asset. And who creates them? It is created by an international organization called as IMF, International Monetary Fund. And since 1988, we do have this. Why did we create it? The next point is the special drawing rights. It is a supplement, or let's say an alternative, guys, which has been created by the International Monetary Fund to supplement the member countries' official reserve. Basically, as an alternative only, the IMF has created this international reserve asset called as SDR. So people will think that SDR is a currency or a claim. Come on, SDR is neither a currency nor a claim. That is something you have to understand, which means that the special drawing rights of the International Monetary Fund, they serve as the unit of account of whom? Of the IMF, that is International Monetary Fund, and some other international organizations. You understand? That is who are the members of the IMF. Now it will serve as a unit of account to them. And now this SDR, I can tell you, they are neither a currency nor a claim on IMF. That is a very, very important point to be noted. Rather, what are they? They are a reserve asset, international reserve asset. It is just a potential claim on the freely usable currencies of the so-called members who are a part of the International Monetary Fund. So, for example, if we are a part of International Monetary Fund, then our currencies can be exchanged for the so-called currencies which has been highly recognized by the SDR. That is in the special drawing rights basket. They will say that, okay, out of the entire globe and out of the entire members who are a part of IMF, some countries' currencies will be highly considered. There are 5 important currencies which are highly considered in the basket of special drawing rights, which is having international value. Indian currency is not there. The 5 important currencies which are in the SDR basket or categories: US dollar, UK pound, Chinese renminbi, Japanese yen and euro. Based on these 5 global currencies only, the other currencies will be exchanged. Clear? This is what your SDR is all about. That is special drawing right is all about. Fine? So as I told you, the value of SDR, it is based on what? The basket of 5 currencies: US dollar, the euro, the Chinese renminbi, the Japanese yen and British pound sterling. That's the UK pound. Now, there is something called as interest rate. What is the SDR interest rate? Now, Special drawing rights interest rate is something which provides a basis for calculating the interest rate charged to the members, means the IMF members guys, on their non-concessional borrowing from the IMF, and that will be paid to the members for their remunerative creditor portion of the IMF, which means that who are the members of the International Monetary Fund, they will be having access to the special drawing rights also. So in such kind of situations, what they will do is the special drawing rights interest rate, okay, they'll give a basis for calculating the so-called interest rate what is being charged to the members of the IMF. You understand? And at the same time, it will also be paid to the members for whatever remunerated creditor positions they have in the so-called IMF list. That's it. So in two ways you have to understand this. One is it is also an interest paid to the members on the so-called special drawing rights holding what they have, and also a kind of interest charged on their Sdr allocation. There is a dual role played by the interest in the context of special drawing rights by the members of the Sdr who are a part of International Monetary Fund. Clear? This is how the practical mechanism of this particular Sdr takes place. Now, having understood the concept and other perspective, the question talks about why is this Sdr important? Don't you think so? Guys, give me give me 40 seconds, guys. I'll be back. Okay, just 40 seconds. Yeah, am I audible and visible to you people? Perfect. So as I was telling you regarding the SDR, so the topic is based on why the so-called SDR, why is the country India opposing the SDR currently. So having understood the meaning of SDR, let's quickly have a look into the current affairs of it. So now in the current affairs, we saw that a country India, we are opposing the new allocation of SDR, and the reason why what we felt is that in the so-called pandemic situation, there is no point at all, right, in doing such kind of new allocations. That is what we felt, because already we are in a huge financial pressure. That is one sort of suggestion that we gave, and the reason why we opposed it. So thus another important point to be noted in this regard is the new special drawing rights allocation. It is said that it would provide all the 189 members of the International Monetary Fund with a new exchange reserve, and that too with no conditions. So do you think a country India should really agree to this? And second point is such a major liquidity or money supply injection. Okay, if that is happening now, that could produce a lot of potentially costly side effects. If the countries who are a part of this IMF, guys, if they're going to use the money or funds, what is there in IMF, for the extraneous purpose, for the unnecessary purpose, it can even lead to harmfulness to some other countries' development as well. So this is the reason an emerging country like India is saying that chalo, we are not going to appreciate the new allocation policy which has been adopted by the IMF as a part of the special drawing rights. Clear? So don't you think so? A country India has every single right to actually go ahead with our own reasons. But the reason that we used very diplomatically was the financial pressure condition, saying that this is not going to ease or give a relaxation to the COVID-19 or coronavirus driven financial pressure. So this is the kind of stuff that we gave. Clear? That is enough. This is what you should study with regard to this particular topic, the current affairs and the concept. That's it. And also in this context, don't forget to revise what is International Monetary Fund. They're one of the most important international organizations along with your World Bank, who helps our country India, I can tell you, every time in the in the crisis, from where the flow of money comes. You can even connect this topic to the 1991 reforms, the new economic policy, or the LPG, liberalization, globalization, privatization. Clear? All these are the related Hitlist topics. Now, moving on to the next topic of discussion. Topic number 88 of today's class talks about agriculture cost of production. Actually, this particular topic is in lieu with the MSP and the farmers' protest, the so-called hot controversial topic. Remember in the Is Academy, okay, in the 10 minutes important economy topic series which I am doing at 7:30 p.m. on a daily basis, this particular topic was the last topic. That is a farmers bill. You remember regarding the protest, regarding the farmers bill, in a crystal clear manner I've explained. So out of that one particular current affairs we are going to see in today's class. So now this particular topic which talks about the agriculture, cost of production, I can tell you that it is with regard to the so-called protest that has been done by the farmers. That is, the farmers across India, we all know they were protesting, right? And it was one of the main reasons behind the farmers' protest. I can tell you it is nothing but the MSP, minimum support price, for what? For the crops, which raises question on the cost of production. Because as a part of the new farm bills that was put forward, the farmers were worried, will the MSP concept be still there, or will that be taken away? Because a lot of private entity was encouraged, a lot of controversy was going on. We all know that, right? So that's, if you see, the reason why the farmers are protesting, and the reason the farmers are saying is that the MSP, that shouldn't be gone for them. It should still be there. They are in a skeptical condition where whether the so-called minimum support price, being the remunerative price given by the government to the farmers, will be taken away. That fear is actually making them to go for such protest as well. One of the reasons I can tell you. Let's quickly have a look into this all about. Now, as far as MSP is concerned, minimum support price is concerned, or let's say the agriculture cost of production is concerned, how do you calculate it? See, as far as MSP is concerned, the CACP, that is the Commission for Agriculture Cost and Prices, on the recommendations given by them, that is the Cabinet Committee on Economic Affairs will give the guidelines to the CACP, that is the Commission for Agriculture Cost and Prices. So based on their recommendations only, the government will fix the MSP. That is minimum support price. But then just like that, the CACP can give recommendation. They cannot give it like that. There are some procedures. So the Commission for Agriculture Cost and Prices, you know what they do? They'll calculate the cost of production incurred by the farmers at 3 levels. A2, A2 plus FL, C2. A2 is nothing but what is the cost incurred by the farmers. Okay, in purchasing the seeds, in hiring the labor, in purchasing fertilizer, chemicals, etc. They are called as cost of input. What is the cost? Second is sometimes the farmers, their family also helps in cultivation, I can tell you. So now A2 plus FL. FL talks about the family labor. So the next category is cost of input plus the family labor, followed by C2. C2 is, for example, I can tell you that not every farmers in our country, India, owns the land. Majority of farmers are small scale farmers or marginal farmers, right? So they will be working on a rented land or a leased land. So what is the kind of implied rent on land? And what is the interest on capital assets over and above the A2 plus FL? That is what the so-called factor C2 takes into consideration. So A2 plus FL plus C2. These are the 3 different levels at which the cost of production is being calculated by the Commission for Agriculture Cost and Prices, through which they will recommend what is the price to be fixed for rice, wheat, pulses, whatever, which should come under the minimum support price ka purview. Clear? This is how it has been done practically. Yes, Pradosh and Ganesh? Yeah. So now the next question is, how do you practically calculate MSP? So now we know that it is not 22 but now 23 crops, I can say. The Commission for Agriculture Cost and Prices, take care, they come in the Ministry of Agriculture. Now they are the ones who will recommend the MSP for all the 23 crops, including the recent crops. Now what they will do, they cannot just fix the price. They have to take into consideration so many factors. That is why I taught you this point. These 3 factors are to be taken into consideration practically if you want to fix the price for the MSP, for any commodity, which will also include what? The cost of cultivation. See, otherwise there is no point in fixing the price, right? There will be no realization as a whole. That is why I told you the practical method as well, how they calculate the prices, the basis in which they can calculate. And at the same time, guys, along with all these formulas or calculations or whatever, if MSP is to be calculated as per the recommendations given by the Commission for Agriculture Cost and Price, I can tell you that they also take into consideration what is the demand and supply situation for that particular commodity. Is it too high or too less? And what is the market price trend? That is, what is the market price globally, and if the product is having international market, and what is the global market trend? All these things they take into consideration compared to the other crops. And now what are the implications for consumers? If the prices are too high, will the consumers buy? But then in spite of the price hike also, when it is a commodity of essential nature, definitely the consumer will buy. But that is putting a lot of burden on the part of the consumer, that is there. Then what is the terms of trade between agriculture and non-agricultural sectors? All these factors are also taken into account while calculating minimum support price, which is the remunerative price, guys, or let's say a kind of assurance price for the farmers, which has been given by the government. Clear? Now, in this particular context, guys, I can tell you that the agriculture cost of production, GK, in the context of MSP, there was a committee called the Swaminathan Committee. And this Swaminathan Committee, you know what happened? They prescribed 3 variables using which you can determine the production cost. And now those 3 variables only I taught you. A2 plus FL plus C2. You remember? So now these 3 variables means, as per the committee, I can tell you that the ideal formula to calculate the MSP would be MSP is equal to C2 plus 50% of the C2. Clear? So that is something which you should understand with regard to this particular committee. Clear? See, all these are not that required for you, but then I am just telling you, only Swaminathan Committee is required. And who is Swaminathan, by the way? He is called as the father of Indian Green Revolution. You all know about Green Revolution, right? So now the father of Green Revolution is Norman Borlaug, but the father of Indian Green Revolution is M.S. Swaminathan. So he is the one who said that if you want to actually, yes, Akirosan, if you want to actually, determine the production cost, this is what you should do. That is why I taught you your A2 and FL and C2, just for you to know practically. See, tomorrow when you become IS officers, you may be even deputed in the Ministry of Agriculture or somewhere. So you should know all these things practically. If you are involved in the policy position or something, yes, Priya, yes, Kriti, you should know all this. Right? So just by learning what is MSP doesn't do the job. So practically how it is being done. All this will enable you to connect with the reality to a greater extent and take effective policies in future. So being a, a civil service aspirant, you should know all this. Yes, Soham? Yeah, you told it probably 100 times. Obviously, I should. Because I should keep reminding you people the practical side as well. Because textbook knowledge doesn't give you everything, guys. It's all about how you can connect it practically. You being civil service aspirants, obviously you are connected with the current affairs. But many a times now, these days, current affairs also becomes theoretical perspective. People doesn't know the practical applicability. You learn the current affairs, but where is the applicability? The question of applicability is still a big question mark. I should tell you that. Yes, Kriti, yes, you told about this in an NCERT course. Yeah, I still remember. I think when I took agriculture for you, I taught the MSP over there. There I taught you, exactly. So it's good to revise as well, right? Kabhi kabhi. So for the long-term memory retention, this will help you to a greater extent. Anyways. And you can just go through this. The price policy for the kharif crops, for the rabi crops, this is how they do it. Now, moving on to the next important topic of the day. That is quantitative easing. The next important, one second guys. The next important thing, that is quantitative easing variance in emerging markets. So now the topic QE, that is quantitative easing, is indeed a most important topic from the monetary policy perspective, because they are the unconventional monetary policy tool, I can tell you. And what are they? It is nothing but it has been introduced by the government to ensure that we have been injecting money supply into the economy, right? And the other day also I taught you what is QE. Your quantitative easing, your helicopter money, your LTRO, long-term repo operations, then TLTRO, targeted long-term repo operations. All these are important hit list topic from the unconventional policy tools or instruments used by RBI, or let's say by monetary policy guys to control the situation in the country, that is by injecting money supply. So now, as far as the country India is concerned, we are an emerging market, don't you think so? So now it is high time that when the entire economy is jammed, or let's say in a shock, we need to inject more and more money supply to get the economy back into track. That is why such kind of instrument is brought in. Clear? Yes, Soham, you taught this in Unacademy. Yeah, I taught you this in another YouTube channel. Yeah, but there I taught you in a different, perspective. Here I'm going to teach you a different perspective, the same topic. But kabhi the current affairs will vary, na? So let me quickly tell you what it is all about. So here we go. Now we all know that this so-called pandemic has hit our economies to greater extent, especially developing economies like India and all. Now in order to fight the so-called economic pain from the COVID-19 pandemic, not only a country India, but rather more than a dozen of emerging markets like India has adopted something called as QE, that is quantitative easing. Clear? So I told you what is QE before. Let's quickly have a revision or look into that. It is nothing but what? A form of unconventional monetary policy tool. where the central bank, okay, they will inject money supply into the economy. Can they simply print the money and give it to the public? No. They will inject money supply through the way in which the RBI, okay, the central bank of a country will purchase long-term securities from the open market. So when the RBI is purchasing securities from the open market, automatically money flows from RBI to the economy. Right? So what happens? Money supply increases. So now people can start lending, the banks can give more loans, and people will be encouraged to invest. So things will get back to normal. That is what your quantitative easing is all about. Clear? And now when the securities are bought by the central bank from the market, automatically money flows from RBI to the economy and also serves to lower interest rate. That is another important point to be noted. And automatically the central bank's balance sheet will also be expanded through such kind of procedures. Now, this is what you should study in this particular perspective. Now, in this particular topic, guys, I have to tell you something else. You are done with QE topic. Why we adopted it and what is the reason. That's it. In this context, there are few other important current affairs. So now this so-called topic, guys, the 89th topic of today's class is equal to 1, 2, 3, 4, 5, 6. 6 extra topics. Because I'm going to tell you individually regarding each of these topics now. So that is why I told you this is a very, very important topic of discussion. Clear? So here we go. Along with the, quantitative easing, which is one of the measures taken by the RBI to boost money supply during this pandemic, you have several other steps called as Operation Twist. Actually, you know what Operation Twist is? Indeed a very important topic to be studied. Okay, you should never even miss this topic. Let me quickly tell you, you can have a note of it. Why this particular topic was in news is the Reserve Bank of a country, India. Okay, they announced that they will carry out the US style Operation Twist. Why? Because they want to bring down the interest rate. Actually, Operation Twist is not a concept by a country, India. We have copied that concept from the US Federal Bank. US is having a central bank and it is called as Federal Reserve Bank. They were following this concept called as Operation Twist, just to bring the interest rate down. So we adopted the same US style Operation Twist so that we'll be able to bring the interest rate down and make the things common. So now what is Operation Twist? It is a term, okay, in which the central bank, for our country it is RBI, what they will do, they will start using the proceeds from the sale of short-term security. That is, whatever you get by selling the short-term security, those so-called proceeds, that will be used to buy the long-term government debt papers. With the proceeds income you get from the sale of short-term securities, you will use them to buy the long-term government debt papers. So automatically what happens, it is leading to an easing or relaxing of interest rate on the long-term papers. The interest rate is coming down now. That is called as Operation Twist in very, very simple term. And this is not a new concept. This particular concept was there since the year 1961. You can just make a note of it, guys. It's a very, very important point. You can make a note of it. Clear? Now, why it was introduced? It was introduced in the year 1961 and now it is in the context of US economy. That is, as a way to strengthen the US dollar and also to stimulate or increase the cash flow or money supply into the economy. One logic, money supply, that's it. And now after so many years, I can tell you in the year 2012, approximately in the month of June 2012, I can tell you, this Operation Twist was so effective that the yield or the outcome on a 10-year US Treasury dropped to a 200-year low. So it has shown so much of results. That is why our country, India, said, chalo, let us go for this Operation Twist concept. That is why we even went for that, just to bring the interest rate down. Clear? This is what you should know with regard to this particular context. Nothing more is required. What is Operation Twist? The background of it and the current affairs and the reason why India is taking it. These many points are perfectly fine, guys, to make a note of it. Yes, Ankit? Ma'am, how QE is different from open market operations? Both are monetary policies. Obviously, Ankit, see, QE is the non-convectional monetary policy tool. You are injecting money supply. How are you injecting money supply? That is, in an emergency situation, the government, the RBI will purchase the securities, long-term securities from the market. Now, open market operations consist of selling and purchasing of security. Two things are coming in OMO. Actually, open market operation is the traditional or the quantitative tools used by monetary policy or RBI. Where when there is too much of money supply, what will they do? They will sell the securities in the open market. So, money is being sucked from the economy by the RBI. When there is no money, they will they'll purchase security from the market to inject money supply. So in both the dimensions, our open market operation works. Whereas quantitative easing works only in situations of what? Lack of money supply. It is just to infuse or inject money supply liquidity into the economy. Simple as that. That is why they don't come under the traditional context or tool of monetary policy. Rather, they come under the unconventional or non-traditional instrument of RBI. Did you get it, all of you? Indeed, Ankit, it's a very good question, I should tell you, because it's a question which most of them get confused. Very good that you asked it. Is it clear, all of you in the class, with regard to your QE and also your open market operations? Perfect. Now, having understood what is, yes, Ankit, yeah, QE is an exceptional case only. Not every time you won't use it. Exceptional case. Like your helicopter money, Ankit, the same thing. Exceptional case, you'll use it. Yes, Pradosh, here we go. Now, having understood this particular concept, the term and current affairs, the next topic of the day, reducing repo and reverse repo rate. What is repo rate? Repo and reverse repo rate, what are they? They come under something called as LAF. Liquidity Adjustment Facility. They are called as repurchase agreements. Okay. Now, they will have a repurchase obligation. Under LAF comes repo rate, reverse repo rate. What is repo rate? The rate at which the commercial banks will borrow from RBI. What is reverse repo rate? The ulta, the rate at which RBI will borrow from commercial banks. Now, when you reduce that, automatically more and more money supply will be there in the economy, because if the rate, for example, the RBI, the commercial bank like State Bank is borrowing from RBI. Now they are borrowing 100 crore and the rate of interest is like, let's say 10%. So now RBI is, is giving them at a higher interest rate, where these commercial banks like SBI have to end up paying more. So what they will do to compensate this, when the SBI people, when they give loan to we the consumers or customers, they will charge us the interest rate of 12%. Only then they can get a profit. Now if the RBI is telling, chalo, let's reduce the interest rate from 100 crore to 5%. Now it is a reduced interest rate. Automatically the State Bank or the Canara Bank, which are commercial bank, they will charge a less rate of interest from we the consumers when we go to the banks. This is how it works practically. So don't you think so? Reducing repo and reverse repo rate can actually boost the money supply in the economy, because we'll be encouraged to take more loans. Only if the interest rate is less. If the interest is too much, whether you and me, unless and until it is a difficult situation, will we take loan? Definitely no. We'll kind of postpone it, because we cannot bear the huge interest rate. Automatically no investments, no productions. Things will be again in a kind of shock, I can say. Did you get it, guys? That's it. That is one way. The second is loan moratorium. What is loan moratorium? Moratorium means extension. For example, you are supposed to pay the loan. The last day is today, August 20. Now for the banks to recover the money, what they will do? They'll extend a period of, let's say, 6 months, 1 year or so, at least to get the money back. So they will reduce the interest rate. If 10% is the interest rate, they'll make it to 7% or something, under the hope that they'll be able to recover the loan. So that particular asset or loan doesn't go under the category called as NPA, non-performing assets or bad loan in simple term. Otherwise, it will cause a huge financial instability for the bank. So they are giving a kind of chance for the people and also for the bank to ensure that these kind of loan or asset is not falling under the category of NPA or bad loan. So they'll extend the loan period by reducing the interest rate. So people will at least pay it back. Did you get it? That's it. Next is reduction in the CRR. What is CRR? Cash reserve ratio by 100 BPS. In simple terms, what is CRR? CRR and SLR. Okay, that is cash reserve ratio and statutory liquidity ratio. They are nothing but the reserve requirements and one of the quantitative instruments of monetary policy. Now CRR is the rate at which the amount of reserve, okay, the amount of reserve in the form of cash or whatever, the commercial bank have to keep with the central bank or RBI. And the CRR is always advised to be at the rate of 4%. Currently it is 3.5% today. It keeps on changing. What is SLR? SLR is also reserve requirement. It is called as statutory liquidity ratio. It is the amount of reserve which the commercial bank have to keep with themselves in the bank itself. And SLR is always higher than the CRR. SLR is like, let's say it will be like 18% today. It is a double digit. But that doesn't mean that since your CRR is a single digit and SLR is a double digit, SLR is important. No. Always CRR is more important. Cash reserve ratio. Because the commercial bank is keeping the amount of reserves with the RBI. So the RBI and commercial bank is coming in lieu or contact. Whereas SLR means only the commercial bank, the transaction or dealing is happening within them. That is why it is said that CRR is more important than SLR. Did you get it? All of you? Perfect. Now long-term repo operations. What is repo rate? I told you, rate at which commercial banks will borrow from RBI. Now that is for a short period of time. What is LTRO? Long-term repo operation is also one of the unconventional monetary policy tool adopted by the RBI. Now they want to inject money supply. So now instead of short term, the commercial bank can borrow money from the RBI for a long period of time. Let's say 1 year to 3 years. And now the next point is at the existing repo rate, they can purchase the money even for a longer duration. So that is a biggest advantage to be considered in the context of LTR, long-term repo operation. That's it. The next current affairs topic is deferment of net stable funding ratio. What is that? So yes, Tejas, what is it? CRR is not usable or profitable. See, Tejas, CRR is never profitable because though the commercial banks like State Bank or Canara Bank is keeping the money with the RBI, they will not get any interest from the RBI. It is a mandatory condition that this particular money has to be kept as reserve with the RBI. Let's say 100 crore SBI is having. Now 20% CRR means 20 crore is going to a commercial bank, sorry, RBI, which means only 80 crore is remaining with the State Bank to give it as loan to the consumers. So they will charge a high interest rate and all. Now if it is only 4% means only 4 crore goes to RBI, remaining 96 crore is with the hands of the SBI where they can exclusively lend the money to the people at a lower interest rate. So that is how it goes. Is it clear? It is never profitable for the commercial banks. CRR, by keeping CRR with the RBI, it is a mandatory condition for the banks to function. Yes, Priya, ma'am, does SLR contain SDR? Not exactly, Priya. Special drawing rights is different from statutory liquidity ratio. SDR has nothing to do with monetary policy. It is the IMF, International Monetary Fund, and the exchange rate and currency is based like that. SDR is a separately international reserve asset. Whereas SLR is coming under monetary policy, it is a tool or instrument used by RBI to control the money supply or to inject money supply. You got the point? Is it very clear? See, Ankit, Basel norms and rules and regulations given by the banking regulatory, not RBI. For the world, there is an entire banking regulatory norms which has to be followed. Every central bank have to follow a few rules and regulations. That's a supervisional authority. That committee was formed in a place called Basel. That is why the name Basel norms has been given to them. That's it. That is totally different from all these things. Clear? Like norms 1, 2, 3 for tier 1 city, tier 2 city. The categorization is totally different. Is it very clear? So do not get confused in those concepts. Now, having said all this, the next important current affairs topic. Actually, guys, under one single topic, I'm taking this for you. Which means that today, instead of 5, we are discussing 10 current affairs. Just like that, fatafat. Okay, so make a note of all these important points, what I'm telling you. Now, here we go. What is deferment, guys? Deferred payment, future payment. I can tell you one of the important functions of money. The secondary functions of money. This is a basic NCRT, guys. It is deferred payment, which means you can make payments in future. Because in barter system or exchange of goods for goods, okay, we were not able to, make payment in future, right? You have to do it then and there. But money means you can buy today and you can pay tomorrow also. That's called as deferred meaning. So now what is deferment of net stable funding ratio? Deferment means future. The future payment of net stable funding ratio. What is that? NSFR. Write it. Now, the net stable funding ratio in the context of RBI, I am going to tell you, our country, India's central bank. Okay. So the NSFR is defined as what? The amount of available stable funding ratio relative to what? The amount of required stable funding. That is, what is the amount of fund that you require for the bank to have a stable position compared to the amount of required stable funding that they have. So what is available stable funding again? ASF. See, available stable funding means the portion of capital and liability which has been expected to be reliable or stable over the horizon considered by the net stable funding ratio, which could be exceeded up to 1 year or so. So in more simple terms, I can tell you that the net stable funding ratio, it is in the context of Basel norms. It's come under the current affairs of that, which means that, see, the net stable funding ratio is nothing but it's a kind of amount of money which has been required to be maintained. Simple as that. Clear? It comes under the Basel III framework on norms on liquidity standard. And the object of such kind of net stable funding ratio is to make sure that the bank, being a commercial bank, chalo, you have enough and more money to keep it with you as a stable position. This is to ensure that the banks maintain a stable funding profile in relation to the composition of their assets and off-balance sheet activities. If they are not stable, will they be able to carry a profitable business? Definitely no. They will be in losses. Just to maintain the financial stability or position of the bank only, such kind of net stable funding ratio concept is brought in. That's it. As simple as that, you can keep this in mind. Clear? When you hear the term net stable funding ratio, just it is equal to, for stability of the bank, some amount of funding is to be required to be kept by them. That's called as NSF in simple statement. If you are unable to memorize the definitions I am saying. So yes, we are done with another 6 topics, guys, in under the same topic 8-9. So don't you feel that these topics are fatafat covered to you in less than 10 minutes? This is the way you should study also. Yes, Mahadev, good evening. Yes, RS and Pradosh, yes. Can it extend more than 1 year under exception on its fixed frame? It's only 1 year, Pradosh. It cannot extend more than that. There is a time limit and time frame. That's very much important. And now, having studied so many current affairs today, I hope that it's not too much for you, but rather a revision as well, because all these things we have been discussing in multiple topics when we were covering, right? But today, no, I couldn't avoid without taking these. That's why instead of 5, we have to go for 10. But anyway, this will definitely help you, I feel. The next topic of the day is nothing but topic number 90, which talks about a secure future for platform. Now, this particular topic comes under the subject area growth and development. And why we study this is because recently the code on Social Security Bill 2020, they defined something called as platform work, which is outside of the traditional employment category. What is platform work? Working in the platform, huh? Is it so? Chalo. Let's quickly have a look into what is platform work and why did the code on Social Security Bill has defined it. Here we go. Platform work means it's a kind of work arrangement outside the traditional employer-employee relationship. Now, what happens in the so-called, platform workers in this particular setup? The organization, or let's say the individual, they will use an online platform. Why? Because they want to access or measure the other organizations or individuals, guys. So they'll be able to find a solution to some particular problems or provide some particular service or any such other activities, I can say, which may be notified by whom? The central government in exchange for payment. This is what has been happening in the platform work. So it's something apart from the traditional employer-employee relationship. Clear? Now, this is highly connected with the concepts like gig economy, gig worker. We have heard this many a time. This will come in the newspapers also. Gig worker, gig economy, the same thing. The same thing in a very simplified way you're going to study. All these things you study because these come under the secure future for platform. So here we go. So now if you see, in this particular topic, you are supposed to understand the type of workers that could come out of the traditional employer perspective. One is gig worker. Somebody who is employed for, let's say, a temporary perspective. That is, a little of polity is coming here, guys. As per section 2 or 35 of the bill. Which bill? The Code on Social Security Bill 2020. They define gig worker as what? A person who participates in a work arrangement. And now when you or me, when we participate in a kind of work arrangement, we are able to earn from such kind of activities, which is literally outside the traditional employer-employer relationship, right? You are participating, contributing, at the same time you are able to earn something, a kind of remuneration. But this doesn't come under the purview of the traditional employer-employer relationship where you go from morning to evening and work and you have somebody on top of you. No, nothing like that. That's called as gig worker. Clear? Yes, Pradosh, is it applicable for unorganized sectors? I mean, do they get benefited under this code? Obviously. See, as far as unorganized or let's say informal sector is concerned, what is the percentage of people employed in that from our country? You tell me, is it a micro perspective or micro percentage? No. More than 90% of population of our country, India, is put up in which sector? The informal sector, approximately 94, I should tell you. So now majority of people are coming in this category only, na? That is why they said that formalization of informal sector is the need of the hour. Seriously, it's very important. That is why the pension schemes, that everything has been extended even for the people who are working in the informal or the unorganized sector. Clear? Now, just like a gig worker, okay, you have another type of worker called as platform worker. They are also been defined as per section 261, guys, where a platform worker is somebody who is engaged in or running a platform work. What about unorganized workers? See, don't get confused between gig worker, platform, or let's say unorganized. They are different. See, a gig worker is somebody who engaged in an activity, get remuneration. He or she has nothing to do with the traditional employer-employer relationship. Now, platform is somebody who undertakes platform work. What about unorganized, informal worker? They are also defined as per section 286 clause, where somebody who is working as a home-based or somebody who is self-employed, they can have their own startup, or somebody who is working for a wages or wage worker in the unorganized sector. They are called as unorganized worker. In simple terms, a kind of worker who is this includes a worker even in the organized sector, but he or she will not be covered by the Industrial Disputes Act of 1947, or let's say chapter 3 to 7 of this code. Which code? The Code on Social Security Bill 2020. That is, you will be employed in an organization where you paid monthly income, salary, everything more or less similar to the formal sector, but then you don't have a security rations for your job. You may not be covered under the Industrial Disputes Act or so many other clauses of this code. You may not get the proper benefit like how a government or a formal sector employee gets. So those kind of workers, though they appear to be in the organized sector category also, they really come under the category called as unorganized, because they are not covered under these perspectives. Clear? So don't you think so? A secure future for platform is indeed important for all the workers who are working in the unorganized sector, or a gig worker or platform worker or whatever it is. You've got to make it very secure, right? That is a part of social security in perspective. Yes, Priya, what an amazing question she has asked. Is Unacademy platform type? See, Unacademy is not a government platform. It's a private platform. So, it's totally different. Okay? It has nothing to do with their government stuff. It's a private organization who is doing a lot of great things for the public as well. We are offering you so many free classes, like what the government is doing. Are we not offering you free quality classes? Be it public or private is not the question there. Who is doing the work? Who is helping you out in your preparation strategy? Of course, we are Unacademy. We, the teachers, are giving you so quality content in the free classes. So that's the whole point there. Anyways, back to class. Did you understand, guys, with regard to a secure future for platform? Perfect. So that's all you should study with regard to this particular topic. So we are done for the day, my young officers. So I hope you really enjoyed this session. So thank you so much, my young officers. So don't forget to like, share, and also put a valuable feedback in the comment box before leaving the class. So I'll see you all tomorrow with another set of most interesting hit list topic. It will not be 5 topics now. The days are nearing. So instead of 5, we'll be discussing 10 topics like how we did today. The heading will be 5, but under that another 5 or let's say 6 topics will come. The next 6 current affairs ka keyword. So we'll be doing this. So then you'll be able to cover more and more topics and also do a quick revision as well of what we covered previously. Clear? So I hope you really enjoyed this session. So once again, a small reminder, guys, you have less time. So make sure that you're subscribing for the Unacademy Plus platform. So here we go. This is my Unacademy profile. You can just go through the details. Now when you click on the free special live class, this will appear for you. It will take you to all the free special live class of mine which I am doing. So the last free special live class of mine was the history courses. You can watch it offline as well as, you can watch it in the context matlab, live as well as non-live. The recorded versions are also available. But I'll prefer you to watch the recorded live sessions. Sorry, the live sessions rather than the recorded one. So from Monday onwards, 6 p.m. to 7 p.m. you will have the 1000 Wala MCQ series starting once again. So nothing to worry. Apart from that, there's an amazing surprise for you people. This coming week, okay, 25, 26, 27. Out of these 3 days, any one day, the confirmed date I'll tell you tomorrow, you will have a marathon session by me. Let's say 2.5 hours. 2.5 hours to 3 hours continuous solid class. When you go to an offline platform, one class is equal to 3 hours, right? The same strategy, but I will try to complete before 3, maximum 2.5 I'll keep. You know what is the topic? Everything and anything that you should know about monetary policy before appearing for the UPSC Prelims 2021. Is it very clear? So now that's indeed a very, very important topic. We all know that monetary policy, RBI, all these things, the concept plus the current affairs. Every year at least 1 or 2 questions come from that. Yes, Pradosh, it's a mega marathon session. Solid for 3 hours you'll be with me. Right from the scratch to the current affairs and also the previous year questions from that area and also the mock or the predicted questions towards the end I'll give you. You have to solve it out. I'll just show the question, you have to solve it out. So this is indeed a very, very important class. It's a marathon class. So don't forget it. It's absolutely free. I am not keeping it in plus or in the special class. I'm supposed to do it in the special class, but YouTube is even more an open platform. So I'm expecting all of you to come. It will be night time only, nothing to worry. So we'll keep it at 7 or 7:30. What do you say? Because 9 o'clock I can't keep, it will go too much. So 7 or 7:30 p.m. if we keep, 7 to 8, 8, 9, 9 to 10. By 10 we can finish. 7 is better I think. What do you say? 7 o'clock I'll keep. So 7 if we start the marathon, 7, 8, 9. 7 to 8, 8 to 9, 9 to 10. Before 10 we can finish. Is that not interesting, guys? Indeed interesting, right? Yes, I know that all of you are excited. Yes, Ankit, Priya, Pradosh, yeah. So what about the others? Yes, Kriti, where are you? Yes, Soham. At 7 is better, Tejas. Perfect. Let's go at 7. So 7 p.m. we'll start everything and anything that you should know. Fatafat like that we'll cover. So this is a mega revision for you also from this broad area. Because it's not just the monetary policies or RBI or the tools. So many related current affairs. Everything what we studied based on this, I'll be doing a mega revision of that. So do not forget to come for that. Clear? Because you will be completely having an idea of what to study, what not to study, and you'll be revising with me. So even if you do not get back to your books also, guys, this is going to really prove full to you. Okay? Perfect. And to all my plus students, I know that you're so worried about the MCQs in the special class and plus class. So now from this Monday onwards, only MCQs will happen till your prelims. Be it free class, be it plus class in Unacademy platform. It's only MCQs. Clear? It's MCQs marathon that will happen there. In YouTube, it will be theory. Do not worry. Kriti, history crash course will go. Do not worry. Do not worry about it. It will keep going on. From tomorrow, it will start. I will tell you the excellent dates also. Fine. And YouTube, I'll do the theory. YouTube, this marathon will go. This economic theory will go. And from September, second week onwards, we will do MCQs also in YouTube. So everywhere only MCQs. How is that idea? Indeed amazing, na? Along with important topics. That is, I'll tell you, I have some plans for every subject as you asked me. History, your international relations, your that, this, etc., which I'll do for you. I'll come with short courses for your revision. Clear? Perfect. So I hope this surprise news has literally, excited all of you and you'll be ready to come for the marathon series. So most probably like Wednesday, 25th of August I'll keep or 27th Friday. You tell me which day you want. 25, 26, 27. Decide and let me know. Accordingly, I'll take it forward. Clear? Yes, Priya, feeling light now. Very good. I know you'll be relaxed. See, main hoon na, then why are you worried? Like how you say, main hoon na, Shahrukh wala movie hai na? So similarly like that, do not even worry at all. As long as I am there, why are you worried? With all the tricks, tips and sab kuch, I am there for you people. As always, my UPSC aspirants. Okay. So yes, my young officers, yes, Swapnil is saying 25. Perfect. So he's so eager. Ma'am, let's finish it fast. So 25th, he can't wait. Hannah, is it so? You're welcome. No issues. Chalo. We'll keep it on 25 or 26 then. Let's not keep it 27 then. I'll do it accordingly. Do not worry. Okay? It's one single day, guys. It's only one day. One day marathon. That's it. I'll be sharing you the link, the posters, everything on Monday. So you can start enrolling and I want all of you to keep sharing the link of this special marathon class to as many groups and as many social circles as possible. So like a lot of the people benefit because this has been done in the free platform. So as long as it's done in the free platform, it is going to benefit a lot of students who are not able to afford for the coaching or whatever it is. Clear? Sharing is caring as well, right? Chalo, you do that simple act of sharing. God will bless you more. I'm not kidding. I'm seriously telling you. Serious. Chalo, anything else that you want to know? Yes. Chalo, so I'll see you all tomorrow. I'll see you all tomorrow at 9:30 p.m. with another set of most important Hitlist topics. Meanwhile, in the description box, once again, I'm telling you, click on the special class links of mine, get the updates, follow me in this Unacademy profile for all the other updates, and use the code Nisha IAS Live to get a discount of more than 10% in the plus subscriptions and also to be a part of the personal mentoring program of mine in the Unacademy platform. Clear? Very important. Perfect. So yes, my young officers, thank you and Jai Hind.